This is Money Exchange with Andrew Barnett.
Hello, I'm Andrew Barnett and welcome to Money Exchange, Australia's only dedicated currency program that keeps you up to date with everything you need to know about global currency markets. Currency volatility remained reasonably low throughout August, with trading volumes lighter than average. But that could be about to change in the last quarter of 2016, with the US Fed Chair Janet Yellen hinting last week in Jackson Hole the Fed is closer to raising rates than it has been. The US dollar rose sharply on the news. But what's the smart money betting on? Will the US Fed hike in September or will it be December? And why not October, November? Why don't they talk about those months? You'll find out tonight on Money Exchange. Success in financial markets can often elude many traders simply because they don't have the right information flow, education and mentorship. Tonight, we'll be speaking with a man who averages over 3% return on investment per month. He doesn't work at a bank, he trades for less than 60 minutes a day, and he does it live in front of hundreds of people just like you. If you've ever wanted to watch a real professional trader trade, then you're going to love my chat with Cameron Malik from LTG Gold Rock tonight. Also on the program, I'll explain for you why the Japanese yen is a safe haven currency and what threatens this status in coming years. Plus, the chance to train with me live every Wednesday evening to learn some of the currency market's sharpest strategies. But before we discuss any of that, let's take a look at this week's headlines. The US dollar fell on Thursday after a weaker than expected ISM manufacturing reading for August. The data showed manufacturing activity in the US contracted over the past month, with a reading of 49.4, the weakest since January. All eyes tonight will be on the official US non-farm payrolls number, which according to leading economists surveyed is expected to show 180,000 jobs were created in the month of August. After touching a three-year low in July, just 48.3 post the Brexit vote, UK manufacturing rebounded in August with one of the sharpest recoveries on record, beating market expectations on Thursday, coming in at 53.3, which sent the pound swiftly higher. The 53.3 reading was a 10-month high and may prompt the Bank of England to rethink dropping interest rates again in coming months. The Aussie and Kiwi dollars both fell sharply post Janet Yellen's comments in Jackson Hole last Friday, but it was the Kiwi dollar that bounced back the most this week, recovering to within 1 cent of its 2016 high. Stronger bond yields and a higher RBNZ interest rate is ensuring the Kiwi dollar remains a popular carry trade for those traders chasing yield. Well, he makes an average of 3.2% per month. He trades from Thailand and he does it all live in front of hundreds of people online every day. But what's remarkable, he's never worked for one of the big banks. He's a genuine success story, making it as a private trader, and I'm lucky enough to have him here in the studio with me tonight. Cameron Malik, welcome to Money Exchange.
Cheers, Andrew. Thanks for having me on the show.
Thailand, trading from there, it sounds like an idyllic lifestyle.
Yeah, it is. It's got beautiful weather. I'm from Scotland, so, you know, being in the hot weather, enjoying the beaches while trading and having the flexibility to trade is perfect.
So how does a Scotsman end up trading for a living in Thailand? How did you get into trading?
Really, I got into trading more so from frustration than anything else. I was having a career where I was working all of the hours, had no time and probably just not making enough money. So I had to really discover, you know, how I could turn this around, find the answers to some tough questions of how I could make more money by spending less time and have a quality lifestyle. So those answers don't really come very quickly normally, so I'll leave a long journey of ups and downs and I'll make it short. But really what I found was through trading, I could really gain back my time, have a great earning potential and, you know, have a good lifestyle. Over the last 3 weeks, I've been traveling through Australia, trading while I've been traveling. Tonight, I'll be heading back to Asia and traveling and trading from there next week. So trading gave me the opportunity to kind of gain back my freedom and earn money as long as I have internet connection.
Gee, sounds like a lifestyle that most of us would love to enjoy. Now, obviously, you've probably traded a number of markets over the years, and you've settled on one now, and we'll talk about that in a moment. 3.2% per month is a pretty outstanding return on investment, given that most managed funds in Australia average about 5 or 6.
Sure.
Tell us a little bit about the number of trades you take on a weekly basis to make that sort of return on investment. And for the folks watching the program tonight, what sort of risk are you applying to the money that you're trading to get that return on investment?
Sure. Well, you know, myself and my trading partner Mark Austin, we average 3% to 5% a month on our trading account. Now, if you compare that, and if you add that up over the year, as you say, it is a phenomenal return on investment over the year. But you compare it to savings accounts, you know, 1% or 2%. You compare it to funds or bonds, maybe at 3 or 5% if you're lucky. Now, 3 or 5% is great, but you need millions of dollars, if not tens of millions of dollars, to really make a return that you can live from.
Yep.
So what I had the issue of being of trying to make a living, to make money, to make high returns on a consistent basis from a small pot of money, because I didn't have millions of dollars.
The big banks money to trade with.
I didn't have the big banks money.
Yep.
I didn't have millions of dollars to trade with, so I needed to safely make money every month and consistently make money every month without risking the farm, you know? And generally it's conceived that making higher returns is higher risk, and I couldn't afford to do that. So I need to have low risk. So generally we will risk about 0.5% to around about 1% per trade.
Which is not really much different to what an institutional banking trader would risk, in my experience working with many of them.
Yeah, sure. So you're not risking a lot of your account on individual trades. We'll typically take 2 to 3 high probability trades a week. Sometimes they'll come a lot. We'll take a trade every day.
That's interesting, because I'm sure a lot of the traders watching the program are trading a lot more than that. And that's one of the things that I often find, is that successful trading often isn't about the number of trades that you're taking. It's about the quality of the trades that you're taking.
Oh, absolutely. Less is more. We always say that.
So walk us through a day in the life of Cameron Malik, living up in Thailand. What do you do? How do you prepare? And tell us a bit about the actual market that you trade.
Sure. So generally I'll get up in the morning, I trade the ASX, the local market here in Australia. That kicks off for me about...
A Scotsman's trading the Aussie market.
Yeah, it's awesome. So that kicks off for me about 7 o'clock. That's the open time in Thailand. So I'm up from about 6.
Yep.
I'll do a little bit of preparation before the market begins, about 20 minutes or so. I'll trade at the open for around about half an hour to an hour. And this is what we call kind of the golden hour. What we found is that trading any more than an hour a day for us actually makes us less money. Would you believe it?
So no overnight positions at all?
No, we don't hold any overnight positions. We're in and out of the market very quickly. As I say, normally within about an hour, normally about half an hour after the open. Because we found on our own account, if we traded any longer, we would actually make less money.
So why the start of the market? What's so special about your system, about the opening of the market, that makes so profitable for you?
Okay, so at the open of the market, we can find the market has become inefficient. And probably the easiest way to describe an inefficiency or an out of balance in the market is to use the example of a boat. If a boat is hit by waves, it'll rock from side to side, but it'll generally come back to center.
Right.
So we look at the market at the open, if it's rocked to the right or rocked to the left, and trade it back to center. Now, the beauty of these inefficiencies that happen at the open is they come back to center very, very quickly, and that's generally within the first half hour. So the problem we have then is, well, what do we do with the rest of our day? Because we know that trading long is not going to make us any more money, and our trades are done for the day.
So the trades are generally done within 60 minutes?
Yep, absolutely.
So how long did it take you, because I know we have a lot of budding traders watch this program.
Yep.
How long did it take you to become proficient and be able to stick your hand up and say, hey, I'm a professional trader now, I'm consistently profitable? Are we talking about 6 months, 12 months, 2 years? In your case, how long did it take?
I think the real success came in sort of in the second to third year. That's when it really kind of started to kick in. You spend a year finding your feet and making a lot of mistakes. And then the second year, getting better, and third, it really kicked off from there.
So Thailand is not so much just about the lifestyle benefit, it's also about the timing of the markets, am I right? Because you also trade the FTSE 100 in the UK later in the afternoon, or your trading partner Mark does.
Yeah, sure. So it gives me the ability to get up at a reasonable time, trade the ASX, and then I'm done within 30, 40 minutes. I can go off and get on with my day. I come back around about 2 or 3 o'clock in the afternoon. I trade the DAX in the afternoon. Mark trades the FTSE. So allows us to do that. If we do want to trade the American markets as well, they happen around about 8 o'clock. So the time zone for us in Asia is very, very good to reach all of the markets.
And often budding traders and people that are trading independently on their own, and amateur traders, for want of another phrase, a lot of them think that they're disadvantaged not having that bank order flow or a Bloomberg terminal to watch. You guys don't have or use any of that when you're trading.
Sure. What we've actually found is we actually train a number of bank traders because they have the order flow, and when they come out of the bank, they can't make any money. So a lot of them come to us and say, well, how do you do it?
I've had the same experience.
Yeah, sure. Sure.
So what you're saying is that's actually a bit of a myth. It's not correct. You don't need that order flow, and you don't need a Bloomberg terminal. You can make it as a private trader, just trading independently, so long as you have the right advice.
Yeah, absolutely. And we're not watching the news. We're really trading only on inefficiencies in the market because we know it'll come back to center, and it'll come back to center very, very quickly.
In the intro, I talked about you trading live in front of hundreds of people every day.
Sure.
Share with us what you do for those clients on a daily basis and the opportunity that exists for them.
Sure. Okay, so every day we have hundreds of people from all over the world log in on a live webinar where they can hear us and see us trade every day. What we do is we put a report into the room before the market opens. So what we do is actually demystify the market. The market's actually quite a complicated thing to trade, but we demystify it, make it simple and easy to understand so our clients know exactly what we're going to be doing or looking for when the market opens.
So before the market opens, you've even told them what you're going to do.
Yeah, absolutely. That we'll see that is there going to be an inefficiency in the market today or not, and this is what we're going to be looking for. But the most important thing, we've done it in a simple and easy to understand fashion. So once the market opens, they kind of know what we're going to be doing. Then we'll tell them in the room by text and on audio that we're entering a trade or we're not entering a trade.
So you'll actually tell them specifically, right now, I'm entering here, here's my stop loss, here's my profit target. So essentially they can follow exactly what you do.
Yeah, absolutely. So all they really have to do is just click the buy or sell button. That's it. So they just follow our trades. It's very easy and simple to understand. So we do all of the heavy lifting and give them the benefit of our experience of 20 years of trading.
And do you also teach them the strategies as well?
In the live room, our traders follow our trades every day. Of course, they ask questions and get an understanding of our trades, but we do also trade people through another program.
Okay. I also know that you have what is called a professional trader graduate program where someone can come along and say, Cameron, I want to be like you. I want to live a great lifestyle and I want to trade the financial markets. I'm sick of my day job. I don't want to do that anymore, and I'll be a professional trader. Tell us how that program works, because, of course, at the end of an interview with Cameron, I'll share with you how to get more information about trading with Cam. But tell us about that professional trader graduate program. Sure.
So obviously in the room we're delivering simple and easy to understand trades to our clients every single day. They do start to wonder, well, how do you do that every day? And many of them get interested in wanting to trade and understand how to trade themselves, or maybe pursue a career as a full-time trader like myself. For various reasons, they want a better return on their money like I did, or they wanted to gain some time back in their life rather than working the 9 to 5. So what we wanted to do was we wanted to offer those clients the ability to work with us every day. So Mark and I, when we started to trade, we didn't go to a course on a weekend and then become professional traders. I think it would be absurd to think that you could do that in any career. We learned to trade by sitting with professional traders every single day of the week, not just one day or one weekend.
And following them and watching.
And following them and learning and honing our plan and all of the rest of it. So we wanted to give our clients, because that's the only way we believe people are successful in trading. So we wanted to give our clients the opportunity
Walk
to
the
do
walk.
that. Yeah, to come with us, work with us every day on a live webinar setting, hassle us, ask us a load of questions, get their trading plans set up, understand our methodology, understand how we trade and make money out of the market using little risk. So we offered that on a pro trader basis. It's called a pro trader program, and people can access us every day of the week.
Cameron, it's been an eye-opener for those folks at home, actually hearing from someone who actually does it. And if you'd like to get more information about trading with Cameron, all you need to do is jump on the website ltggoldrock.com, and they'll share with you all the good oil on how they can come and trade with you.
Sure.
Cam, I know you're heading back to Thailand tonight. Thanks so much for joining us here at Money Exchange. Thanks, mate. After the break, we'll chat with Annette Beecher from TD Securities to find out what the odds are of a US Fed rate rise in September. Don't go away.
The Audi A3 runout is now on. Purchase the Audi A3 sedan with style and tactic packages. From only $45,000 drive away. The Audi A3 runout. Timing is everything.
It takes a lot to create new life. Elevate has more folic acid and iron than any other pregnancy multivitamin. Folic acid is clinically proven to reduce the risk of neural tube defects. But it takes time to build up your nutrient levels. So you should start taking Elevate before you start trying. Take the first step for a healthy baby with Elevate, Australia's #1 pregnancy multivitamin, with you every step.
When children live in poverty, their nightmares become real. 6-year-old Enzalani watched her mother die in agony. Now, she's so sick from drinking filthy water, she's terrified she'll be next. 9-year-old Sonia has to sleep on the dangerous streets, and if no one helps her, that's where she'll stay. Please, will you help us end the nightmare of poverty for innocent children like Sonia? You can help families and communities thrive so that they can keep their children safe. And with your help, a child can go to school. You'll love getting to know the child you sponsor. You'll watch them grow to become strong and full of life, free to believe in their dreams of a better life, free from their living nightmares. But without your help, the nightmare of poverty will go on. So please, call World Vision today on 13 32 40 or go online and find out how you can sponsor a child like Enzalani right now.
With Saniflow, you can create an extra bathroom anywhere without expensive plumbing. A Saniflow pump connects to an existing sewer point, simple and easy. Then just add normal bathroom fittings and connect the water. Saniflow.
Nighttime is my time with Olay Regenerist Overnight Miracle. From first drop, it helps renew your skin. And used with Olay's most advanced cream, it boosts skin renewal in just 5 nights. For firmer skin with visibly reduced wrinkles, search Olay Overnight Miracle.
When there's hard work to be done, you need more than a truck. What you need is a warrior, a truck that will hold its ground all day. Tailored finance to get you on the road faster all day. And a service plan to keep you going and going and going all day. Fuso is the only truck with the soul of a sumo. Fuso all day.
She is America's feistiest, most controversial commentator. Here's America's most explosive politician. Well, Ann Coulter has written a new biography about Donald Trump, and she's my guest on the next Bolt Report. Don't miss it, only Sky News Live.
Welcome back to Money Exchange. They raised official interest rates in December last year, and it appears the market is pricing in another rate hike this December. Of course, I'm talking about the US Fed. The US dollar spiked on the back of Miss Yellen's recent hawkish comments. So what's the chances she'll surprise markets again with a rate hike in September? Joining me on the line from Singapore is Head of Research at TD Securities, Annette Beecher. Hi, Annette, and welcome back to Money Exchange.
Thanks, Andrew. Good to be with you.
She caught many of us by surprise last Friday, Janet Yellen, with her more hawkish tone about a potential interest rate rise. What did you make of her comments and the reaction on the US dollar?
Well, I guess I have to say one little piece of information in that her speech was actually 22 pages long, and but what the markets are very good at finding was the one sentence that mattered, which is the case for a rate hike has strengthened. And that's all we needed to see or hear. I don't think anyone listened to the other 99% of what she had to say. Now, has strengthened does not mean a done deal by any stretch of the imagination. But given that Janet Yellen is well known as probably the dovish, if not the second most dovish member of the board, so for her to shift her stance was quite significant for the markets, and it was great for every other global currency because the US dollar finally strengthened and took the heat out of the rest of our currencies, the Aussie dollar included.
Yeah, it certainly did. I know it caught a few of the local traders by surprise here at some of the banks, particularly one of them who we had on the show last week, but he's generally pretty much on the money. Annette, traders watching the program, currency traders, we often talk about charts and we often talk about interest rates, etc. The one thing that we don't touch on very often is the US 10-year Treasury yield. In your opinion, as a currency investor or a trader, is this something that can give those traders looking to add to a US dollar long position or take a US long position, is that something worth watching in the coming months? We're about 1.5, 1.6% at the moment. If we see it drift up to 1.7, 1.8, is that a signal that big money is really starting to come for the US dollar?
It's certainly been a trade that hasn't worked, shall we say. And the last time I was on your program, we quickly discussed the fact that the Fed started this year telling us very clearly that 4 hikes are on the agenda, and everybody had their 2017 outlook piece firmly discussing a stronger US dollar, and that certainly did not actually play out. We've had to feel our way through fits and starts in terms of the data, and as you say, US 10 years are literally sitting at 1.6, which doesn't sound particularly attractive, but when most of Europe is 0 or negative. We know Japan is still negative, even though it's picked up over the course of this week. So it's still looking as an attractive play and a good return on your money. I don't think it matters anymore that the US is not AAA. We stopped that conversation, 4 years ago when they lost their AAA rating. It's about getting your money back, getting back a half decent yield. So certainly investing in US dollars might finally be the theme for next year when the Fed tightening cycle gets really underway.
We had a decent private ADP jobs report this week. I think 177,000 jobs leading into the non-farm payrolls tonight. What did you make of that? Are we expecting 180,000 read at TD Securities? Are we expecting higher or lower than that at the moment?
We've had a couple of fits and starts discussing this payrolls number. We did have a solid number, I think, of about 180, which I still think the market is at. But over the course of this week, all the data crunchers have revealed the fact that August is a statistical quirk, whereby August tends to be a relatively low number. And so I think the market's probably really looking for something closer to 150. That's where we are at TD Securities. By no stretch of the imagination are we saying that is a soft number. We're just saying that seasonality does not look upon August favourably at all. And so in one way, that's a very good reason not to completely rule out a September hike. That's only a couple of weeks away. We won't know if August payrolls is weak or statistically weak, so why not wait for another report or two before deciding to pull the trigger again?
Well, that'll be interesting. 150,000 jobs, if that is the reading, I think that'll catch a few traders by surprise that are long on the US dollar, because the reaction, I would think, would be a slide on the US dollar in the short term. But let's talk about the pound for a moment. A really good PMI reading overnight shot the pound up higher. Is that likely going to put the Bank of England, do you think, on the sidelines at all with respect to lower rates in the coming months, or is it going to need something more substantial than that to stop Mark Carney from putting rates down even lower?
Well, the pound is a tough one. I mean, as we all know, before Brexit, it was 150 and then quickly slumped to 130 and has been everything in between. The issue for the pound, when I just had a quick look at the the whole week in review, the pound's actually been the outperformer of G10 over the past week. I don't think it's because the data's been particularly positive. It's just not negative. The fears of Brexit, as we know, most of London and the glitterati of London didn't expect Brexit to happen. They thought the economy would be slipping into recession. And in fact, a lot of the data since then has surprised to the upside. And I'm sure on your program you probably discussed that retail sales figure for July, which was like 1 point something. It was a massive number. And quite a few numbers since then have actually managed to outperform market expectations. But our view at TD is that the Brexit is not a stop-start tradable event right now. It's a slow burn issue. We haven't triggered Article 50, and that may not even happen until next year. So for the moment, I think the pound is just running on relative fundamentals, on a lack of disappointment. But I do think at some stage, the lower frequency numbers, such as business investment, might start disappointing, and then we'll have another look at the pound and it will trade lower.
Thanks very much, Annette. Always appreciate your time and have a great weekend.
Thanks, Andrew. Speak again.
That was Annette Beecher, Head of Research at TD Securities in Singapore. Well, let's stay in Asia now because we're going to talk about Japan. Japan has the third largest economy in the world, and the yen, along with 7 other currencies, makes up 80% of the world's currency volume. But one thing that makes the yen unique, and that is it's a safe haven currency status. Even with mounting debts, negative interest rates and huge money printing program, the yen is still seen as a safe haven to buy in times of uncertainty. Why? Isn't the economy supposed to be a basket case? Well, tonight I want to share with you some of the reasons why the Japanese yen is seen such a safe haven currency and why it is over the coming years ahead one country in particular might change that status. But if we go back and look at Japan historically, Japan has traditionally had trade surpluses. I know when I grew up as a kid, I'm 46 years old now, but when I grew up, a lot of things were made in Japan. And over the many, many decades, trade surpluses means essentially the country is exporting more than it's importing. So there's a lot of money coming into Japan. So those trade surpluses have really been a positive for the Japanese economy over a number of decades. That may change in the years ahead because Japan's debt is growing and growing and growing. And as we know, the economy in Japan is not doing so well. But the yen has been seen as a safe haven currency largely because of that trade surplus situation. But Japan's debt has mostly been domestic. So if you look at the US and other countries around the world, the debt levels that are building up in the US, Australia and other countries are certainly larger. But the Japanese debt is mostly to itself. The Japanese people are amongst some of the highest net savers in the world, and it's been a reserve currency for Asia for many, many years. But China's rise in Asia as the #1 growing economy is likely going to threaten the yen in the years to come, because of China's growth and because of the Japanese ageing population. In fact, if you can believe this, Japan had 1 million reduction in the population in Japan in just the last 12 months. So there you go, the Japanese yen, a safe haven currency. Well, that's all we have on the program for tonight. We trust you've enjoyed our interview with Cameron and our cross to Annette. We'll see you again for next week's program of Money Exchange. Bye for now.